when to buy the stock market, Errol. This is a classic question that I get from the most passive, friends of mine in the market. When should I get in? When should I open an account and start buying stocks? And the easy answer, if you are a passive investor, a passive trader, is pretty much any day is a solid day to buy stocks, given that it should be a theoretical 50-50 likelihood any given market that, like, if I buy it, it goes up, or if I sell it, it goes down, should be pretty even. Equity is one of the only asset classes, Errol, that we're looking at small technology here, that small technology equity index future, but you look at the S&P 500, NASDAQ, anything, the scale is going to be tipped in that direction. And so, I mean, what do you think about that idea of, like, oh, I'm opening an account, I'm just starting to get invested in stocks, or, whatever the trigger is for me to be buying stocks? Are you the type that would wait for, like, oh, I got to wait for a specific day? Or do you take information like this and say, like, man, like, just whenever you're getting to it, start buying stocks then?
Yeah, I mean, for me, I'd like to see at least some type of consecutive raise in the market before I feel comfortable buying. I mean, again, like you mentioned, I know it's kind of a 50-50 whether a stock moves higher or lower. So a stock could be at its high and we could buy and it could go even higher. So, but for me personally, you mentioning it, I have to go or get more aggressive into consecutive red days for me, at least. What about you?
No, I think that we definitely park our cars in the same garage. That is what I tend to think as well. But I've gotten better at the idea of, like, if I was to open an account today and I had $5,000, I would probably put 500 or $1,000 into the stock market just to start, like just be like, no matter what day it is. And then I would kind of scale in accordance
Okay.
with what Errol is saying here, where it's like, oh, I see a down day or 2 down days in a row, then I'll put another $1,000 up. Or, the stock market is tanked in the last week, it's down 10%. I'll put another $1,000 up. But the problem with waiting for those down days a lot of times is, like, if the market's at 100 and it's like, all right, the market's pretty much unchanged, I'm not buying it here today, and then it goes to 102 or 103, and then it falls down to 101, it's like, oh, I got my down day to buy into, and it's like, dude, you could have bought it at 100. So something that I've noticed with myself personally. But you're exactly right, though, that from an active trader's perspective, the odds do improve to 57% the day after any kind of move lower. So, like, even if the market's only lower by, half a percentage point or a quarter of a percentage point, the odds do tip further in the direction of that buyer's side of the scale when you do wait for that down day, as you would have expected, right? You and your ilk always talk about buying the dip. You guys think that that's hilarious. And this is that idea in statistics.
Yeah, I have one question now. Does this take into account how far the down move is, depending on the probability of a bounce?
It does not. And so I think you're absolutely right to go further in that direction of, like, what's the severity of that down move? Or is it 2 consecutive down moves and the odds go further in your direction? When small technology has moved lower 2 days in a row, odds are now up to 60%. So now you've got 10% of edge in your favor here. And to cap it off, if the market has moved lower by 2 percentage points, you've actually now got 62%. And so it really is, it's one of those rare things, Errol, because I crunch these numbers for, I'll crunch them for crude oil, I'll crunch them for gold, or, foreign exchange or interest rates. And stocks are one of the only markets that, as the severity of the down move gets worse, 2 days in a row it's down, 3 days in a row it's down, or 5% lower, or 10% lower of a move in the equity market, the bounce back effect does correlate to get better and better.
Okay, because I know we had brought this up. I think it was crude oil not too long ago. And we were talking about this large down day where we have some type of better rubber band effect, for lack of a better term. But is that what we're talking about here? How yesterday's price action has nothing to do with today's price action?
Yes. Look
Okay,
at that. Look at he listens to me. This is why you're like
crazy.
my best friend, man.
Yeah.
I say this stuff and he's actually like digesting it. Absolutely amazing. And this is what we do as probabilistic traders, statistic traders, not emotional gut feeling traders. It's like every asset class has its own little sources of edge
Hmm.
in the market. And in crude oil, yeah, you and I looked at like, all right, if it's a big day in crude oil, what's because obviously in the last month or so, we've been seeing big days in crude oil. And so, like, we were looking at, all right, what's the likelihood if we see a $5 rally in crude the next day? And we saw pretty much no trend for the next day. Crude oil is more or less memoryless in that idea of like, if it sees a big day to the upside or a big day to the downside, don't see a lot of trending after the fact, and that doesn't really help us. I mean, it helps us in the fact that it's like, okay, I know that about crude. I can't really hang my hat on any of those trends, but the stock market kind of does have a memory when it comes to moves to the downside. You tend to see that bounce back effect, and you've seen it. Here's a market, Errol, that in the last year is down. I mean, a year ago the market was almost $70. It's below 60 now, but if you waited to buy that stock market on big moves lower, like we saw here in May, or a couple of these, dives that we saw in the fall of 2021, or here in the early part of 2022, you see these big ripping bounces back. And as you can tell from the statistics that we've laid out and the chart of small technology, the severity of that down move does kind of push the odds in your favor when you do go to buy the stock market.
No, I see that. And even just looking right there in March 2020, we had a pretty large down move and we had a pretty solid bounce back to around that 60 area, kind of like you're saying.
It's one of the most classic strategies. I think one of the easiest ones for passive traders to get on top of, and it's one that I'm actually in the midst of trying to catch here. I have just off of I'm an aggressive enough trader that if I see a big down day in equities, and I'll pull up the shorter term chart here. If I see a big down move in equities, I'm probably buying the first down move. So I got long in here around 58.5. Bought another one yesterday around 57 and a quarter, 2 down days in a row. Now the odds aren't playing out in my favor. Now it's 3 down days in a row here for small technology. And I would look to buy another one here. But also, since now I have 3 on Errol, I'll probably look to I'll hedge some of this exposure. If you don't have a couple of units on, I think this is a right market for that bounce back effect, buying the stock market on 3 days lower here, something we don't often see. But since I am a little bit deep here, I'm going to go over to NASDAQ, if I can type it in correctly, and sell a little call spread here. This market, $350 compared to sticks, $57 is, as you might guess, about 7 times as big as the sticks market. So though I have 3 contracts on, I want to make sure that I'm not getting overhedged. And I would probably just look to something as simple as selling this $5 wide call spread for $1 in NASDAQ against my position there. But that's
Cool.
buying the stock market. That all sound good to you or what?
Sounds good to me. I actually just put on a long position in sticks. So we'll see what we get. Maybe we could talk about it next week.
Yeah, we'll watch this one grow and see what happens. But
Yeah.
Errol, thanks so much for joining me, man. Always good to hop on with you. You're going to check out Apocalypse Now. I'm going to check out Bathing Apes. Do you have any Bathing Apes stuff?
I don't actually. I don't.
Kind of pricey, man. I don't know about that.
Yeah. Especially back then, I was trying to figure out if I was going to get ramen or milk. Freshman year of college. I'm just kidding. No, but yeah, no. It's always fun hopping on here though. Thanks, Frank.
Yeah, of course, man. You are the absolute best. Make sure you check out Errol on Today's Assignment and on Twitter. Always got insightful stuff to say from the young, new trader's perspective. Great stuff as always, Errol. Thank you. And thank you, everybody, for watching. Yeah, this has been Small Stakes for Thursday. Splash into Futures is coming up next. You're going to want to stick around for that. Have a great night, everybody. Peace.